Just in case you missed it, here's a clip from our last live broadcast. The bad policy of the week is a warning to our nation's leaders. The next subprime fiasco is on its way, only this time it will be more frightening and widespread than the collapse of the housing market. Financial institutions are issuing credit cards to unqualified individuals in record numbers. The latest reports indicate there are 800 million credit cards in use in the United States, more than 2 cards for every man, woman, and baby. What's more, not long ago, Premier Bank Card in South Dakota raised their interest rates on credit cards to almost 80%. Let me say that again, 80%. Of course, in compliance with the Credit Card Reform Act, they notified cardholders that they had 60 days to pay their debt before the new interest rates kicked in. But the people who have been hardest hit by the economy had no way to pay that debt in 60 days. In other words, they were trapped. What's more, as you watch this program today, college dormitories at every university are being stuffed with credit card applications offering students with no jobs and no assets $5,000 to $10,000 in credit. Today, 74% of all college students carry credit card balances from month to month. It isn't low-interest student loans that they should be frightened of. It's credit card debt, which they pay 29% interest on. What's even more worrisome is that credit card loans are being packaged up as derivative-style investments on Wall Street, just like the subprime mortgages which caused the housing collapse. And with very few places where individuals can get decent returns on their money, these derivatives are being bought, sold, and rising in value, just like the subprime loans that triggered the current worldwide recession. If you're wondering why the real estate market hasn't recovered, that's easy. Banks aren't making home loans. Why would any business make a home loan at 4% when you can get a credit card loan for 80%? In the final analysis, the economy can't recover unless people can borrow money to buy goods. So as the economy falls further into trouble and people have fewer financial options, the offer of credit, even at interest rates of 80%, isn't something the person on the street is going to turn down. Our bad policy this week is a warning to our leaders that they have once again fallen asleep at the wheel. Financial institutions earned over $50 billion from credit card lending last year, and this number is skyrocketing. In the meanwhile, miss one payment on a single card and the banks are permitted to raise interest rates on all your cards across the board. Elected leaders need to act quickly to get on top of the predatory credit card practices, which are now putting students, the unemployed, and the middle class into a hole that grows deeper by the minute. And if there is one thing we should have learned from the damage that lending to unqualified borrowers caused the economy, it is the record defaults, the number of defaults that will lead to the collapse of derivatives once again. Unless credit card interest rates are brought in line with small business and home mortgage loans, there is simply no incentive for banks to make the kind of loans that will stimulate jobs and help the economy get back on its feet again.